The purpose of a self-directed IRA is to grow your wealth and not have it sucked away by the very vehicle that's growing your wealth. Flat fees instead of a sliding scale. Like, we don't penalize you for doing better.
I get that all the time. I lost money in my IRA. How do I write it off on my 1040? You don't.
Just like when the stock market goes down, you don't get a write-off.
What are you really going to do with the money? I'm going to buy another rental. I'm going to go lend more money. Why wouldn't you do it in a tax-free environment? So this is John Hyre and Kaaren Hall. No, not
Shush.
Kaaren. Right?
Shut the
Wrong.
door.
Right? Yeah. Are you a Kaaren? No, emphatically not a Kaaren. There are two A's, a Kaaren, which
Correct.
is a very, very different creature from Kaaren.
It's Kaaren with an attitude, you know.
It's Kaaren with morals, manners, and an attitude.
Oh, you're so sweet.
So, well, let's start off with, I mean, you founded uDirect, an IRA custodian. We've worked a lot together over the years on legislation, on training, on just going back and forth with information in the industry. And so I just wanted people to get to know you. So before we get to uDirect, which is the fun part, let's start with Kaaren pre-uDirect.
Right.
Like you've had a journey, and it's not one anyone would predict.
Not unless they saw a different podcast and they and they saw that. But no, I mean, like, you know, I mean, tell me if you agree, but when I did not grow up, maybe you feel the same, thinking that I was going to self-direct IRAs. Okay. I mean, you know, start there, because IRAs were founded in 1975 and I was born before that. So they start there. But you know, you don't know you're going to get into this space. You don't just wake up one day and decide. It's something that comes upon you. And that's how it was for me. You know,
how did it come upon you? I understand there was a pretty short gap between your discovering IRAs and your founding uDirect, which is a pretty, you know, that's 0 to 60 in a Ferrari speed right there.
Well, yeah, but even before that, my first, you know, in college, my first career was, as you may know, being a radio announcer. So.
And you were a radio announcer for a good bit of time, wasn't it? Almost 2 decades.
Yeah, just about.
How did that start? Let's go with that. How do you get into radio announcing?
Wow. Okay. So I'm in high school and I'm taking the ACT, and it gives me my coordinates at the back, and it said broadcast journalism. I thought, okay, let's do that. And that's how it started. And I was on the radio in college. It was in journalism and radio. And then I got a job in town. And then from that, that was in Flagstaff, went to Phoenix. Phoenix, got promoted to Seattle, where I worked with Jimmy Kimmel on a radio station in Seattle. You know, for a little bit till we both got fired, because that's radio. And then, you know, but just stayed in that industry. And then even after both my kids were born, I was still in radio. And then decided I needed to actually earn a living, and got into, I think while I was still in radio, got into property management. So I was managing apartment buildings in Seattle. And then I became a realtor for a year and had that experience of working for free and not getting paid. You know,
how did you get into managing buildings? Like what led to that?
Yeah. So Jimmy Kimmel was on the show. It's called the Me and Him Show. Jimmy was him, and the me was a guy named Kent. My friend was dating Kent, and she was in a big property management company. She was an exec, and she goes, "Oh, you know, there's this building. Hey, why don't you manage it?" Like, great. And so I started doing that, and then I did well. So they kept giving me bigger buildings, and so I did that until I moved out of Seattle.
Okay, so. And on the radio, what do you do? I'm just curious. I want to close that part, but what does that mean to be a radio announcer? What was your specific role?
Well, I mean, playing music, a lot of it was, you know, playlists, music, you know, kibitzing, that kind of thing as a young person, but I also became a news director, and I did the news and in a few different stations, including, I was on KTAR in Phoenix. And I worked with Lee Hacksaw Hamilton, who's a great guy. It's such a wonderful man. And so, you know, news as well. So it was news and music and this sort of thing. But then, you know, that's fun for a while. And then I got into real estate.
Then you got into real estate, but you also got into the financial world.
I did. I had a real estate license, but also a life and health license. And was about to go into that when I had the opportunity to get a job with a self-directed IRA company. You know, doesn't matter who it was, but I worked for them for a couple of years. And then left and went out on my own and founded uDirect IRA Services right in the middle of the great economic crisis, the Great Recession.
Wait, what year did you
2009.
found uDirect?
Yeah, 2009.
Way to go.
Yeah.
So you're contrarian, Kaaren. No, I'm not.
Right. And it was perfect because no one knew what a self-directed IRA was. It was a perfect storm. And like, well, what is this? How do you do? What's the difference between a transfer and a rollover? I mean, all these things no one knew, and everyone was just so hungry for this information because, as you may recall, access to capital was just cut off, and you couldn't get mortgage loans. I think you had a cap of 6, but if you're an investor, and at that time you could buy real estate on tape. And so if you already had 6 properties, you couldn't get a loan on another one. So how do you find the capital to continue investing? And the answer was this multi-trillion-dollar pool of retirement dollars in America. And so everyone's just crazy to know about it. So it's just the perfect time to open the company.
During one of the most horrible recessions ever. But I mean, for the viewers, a lot of you know this, but some of you don't. Self-directed IRAs, for historical reasons, are based on small real estate investor culture. When self-directed IRAs were first sold, one of the industry figures in particular would tend to go to the real estate investor meetings, promote them. I remember one time seeing him up on a table, which he did not belong on a table like this definitely, or on a pole or anything.
That's who I think of. Yeah.
Yeah. So the culture is driven largely by the real estate ethos, similar to how ROBs, rollover business startups, are big in the franchise industry. And so the culture of the franchise industry kind of permeates it. So actually it looks and sounds like bad timing, but both, as you proved, but I'm just rewinding, going through it logically, those were the guys who were buying bargains. And they were bargains because, like you said, you couldn't find financing. And you found a way to make them have financing. So how does that work to start? I mean, because you're, spoiler, my understanding is you hit $1 billion assets under management.
$1 billion. Yeah. 1.3 billion. That's what we're at right now. Yeah.
Nice.
Is that crazy? Yeah, give a blonde a laptop, and this is what happens. So
game on.
Yeah.
Is that what happened? I mean, how do you start an IRA company? What did it take for the licensing, and you had the idea and you had some industry expertise, and what was missing? Clearly something was missing that made you think, you know what, I'm going to do this.
Right. Well, the fact that I could, and I could see what I was building. And so I found I needed to find a custodian to park the money with. So I interviewed banks, I interviewed trust companies, and found a trust company and created an alliance with them, which is ongoing. And so then basically they're like the back office doing the cash management and so forth. And uDirect IRA Services is the face-to-face with with the account holder, and we're helping them through the process and all of that. So I started that, and just on a very simple premise that I already knew how to open self-directed IRAs, how to help people build their retirement using alternative assets, and let's just carry that forward. And it's going to be 17 years now that I've had uDirect.
What was the outreach? How did you first start building it, and how has that changed? Because it's different when you're scaling, when you're little and you're the one that's doing a whole bunch of things, and then it starts to grow. So how did that start, the outreach?
After it started, it was just one little thing at a time. I mean, back then, it was speaking live in front of audiences. I was working with Keystone CPA and the Norris Group at the time. We would speak at real estate events. Yeah. And we're like a trio of companies. We did a lot of live events, and then going to the real estate investor clubs, because everyone wanted to get into the real estate game in those years, because you didn't have to have a lot of money to buy a house at that time. Now rates are different, but prices are a lot higher than they were then. And so the market, obviously real estate is always going to change, and it has since, but it was really the perfect storm at that time. So real estate investor clubs really is how I got started.
Okay. And California would have I think you were mostly California to begin with.
Yes. And San Diego Club, Bill Tan ran the largest club in America, San Diego, SDCIA. And I actually, in 2012, I founded a real estate investor club here in Orange County, and you've spoken for us in the past. And that is continuous and ongoing. We're back to having live meetings now. They're not just on Zoom. So that's really fun. But then starting to travel all over the country and talk about self-directed IRAs. So just getting the word out there and being asked and saying yes. I mean, and just doing the work.
You're just doing work.
Well, yeah,
Well, because you were also a single mom when you did this.
true.
So
That's
there's a lot of work involved.
Yes.
And I've met your son, and
Yeah.
I would say he seems normal, but he actually seems a lot better than normal. And he
Yeah.
also could be an extra in any Viking movie, no question.
Or Vikings. What can I tell you? He is, in fact, I wanted to name him Thor, and I got vetoed. But yeah, now that you mentioned, he graduated and he was 18th in the nation as a hammer thrower, as a D1 athlete. So yes, he was truly Thor.
He was living up to. He knew
Yeah.
his true name.
But
Like
then my daughter got a degree in pure math from Berkeley, and then went to Peru for a gap year, which turned into 3 years. And now she's a junior exec at Lufthansa Airlines, and so she's doing great things.
So how did you do that? I mean, doing either of those, being a single mom and having kids come out really well, or founding any company, much less one that's grown the way you have, and you did both. Any thoughts, any philosophies? Like what carried you through? That's a lot.
I think when you have a working mom, you see what it takes. You can see from the ground, you can, from a child's perspective, you can see what it takes to succeed, because you see the real work. You see how they make the sausage, and you know what you need to do going forward. And I think the kids have always worked hard. I kept them in athletics, because, kids, they have so much energy. So they're always in athletics. So I raised them like that. And then they saw me do it. But, I saw my mom do it too. My mom was a single mom. And so I saw her support the family. So she inspired me, and then I inspired my kids. And now they're both just amazing. And I'm a 3X grandma now. So it's
I've got a big life
home.
change coming. Moving to Charlotte. Why? Because I have 3 kids who lived in 3 different cities.
Yeah.
But 2 of them are now in Charlotte. And the one thing that will get me to leave my tax haven here in Puerto Rico, where I don't pay federal tax, 2 kids in one spot. So we're going to head up to Charlotte, and I will eat some of my own medicine, which is using a rollover business startup to run the practice.
I was thinking to ask you, why do you love the Robs? But now I know. Well, first off, you're an attorney, and you know how to use it properly. And that is incredibly, Robs can be a great thing, but so many people don't know how to use it. So it's fabulous. You'll be the example of somebody who uses it right.
I think you hit it spot on, and I'll bet it's true. No, I know it's true because we're in a similar industry. What most people do online with the Robs is wrong. If you look at the large pioneers, I won't name them. I respect them because they came up with the concept. I really do respect that. My 3 issues with Robs, as generally, if you look online, and therefore if you ask AI, because that's just looking online in a different way. 1, traditional, not Roth. And it's amazing to me. I talk to ERISA lawyers when we're looking at a complex situation about controlled groups and all that. And every single ERISA lawyer, when I mention we're using Robs, why would you do that to your clients? And I look at them and I go, Roth. And then they sit for a second and go, oh, because a traditional, so you have a Robs, for those of you not familiar, I preach on it a lot. You'll hear about it at some point. You have a C corporation, usually owned 98% by a 401k, 2% by an individual. The C corporation is taxed at 21%. If the 98% owner is a traditional IRA, you are not just double taxed, because when you distribute money from a traditional, it's taxable. You're double taxed at your bracket, the highest possible rate. That's crazy. And that's what most of them do, thoughtlessly, truly thoughtlessly. So A, Roth. B, they invest in Wall Street. They're all set up for Wall Street, not Main Street, so no self-direction. And then throw in that people who know Robs here, people who know self-directed here, and the Venn diagram overlap is teeny tiny. There's not much in that regard. And then finally, the prohibited transaction rules are different. So now we're getting into geek talk for the audience. We love self-directed IRAs. And when you're talking to a fellow geek, sometimes you get carried away and you have to translate for the normies, something Kaaren is very good at.
Well, give them the citation where they can find it, because they're going to want that.
Oh, for the prohibited transactions,
No,
49.
yeah, IRC 4975. So though you rule book people, there you go.
There you go.
Prohibited transactions.
Those rules are a little different for rollover business startups. Now, as you can tell, just the word prohibited transaction is, you probably shouldn't do that. But the code's not well written, which keeps people like me, I wouldn't say gainfully employed, but employed, translating things that should be simple but aren't. And so anyway, so with the ROBs, those are the two things, that they should be done Roth, they should be self-directed, and it takes a nuanced understanding of the PT rules because they just apply very differently. But now back to you, because it just made me think what we do for our kids.
Oh, what wouldn't we do for our kids?
And so I'm going to go from 6% tax to 25% when you throw in state and federal, but only one time. 98% of the money when it's distributed into the Roth 401k. It's not going to be taxed again for the rest of my life plus 10 years.
Mm-hmm.
And so it's a worthwhile sacrifice to see the little stinkers.
It's worth anything. It's worth anything. I love being a grandma.
What are the 3 toughest spots you found yourself in ever? But one of them has to include uDirect. One of them has to include uDirect.
Well, they probably all include uDirect. I think that one was in the early days taking on, I thought I needed capital to help me start the business, and I probably didn't need it. And I had some investors that were involved, and we had differing opinions about, but none of them they were passive investors and felt like, it seemed to me that they had a voice, or, I mean, certainly they had a voice, but they didn't have, like you were mentioning, control in the company about what happens. And of course I listened to them and took their advice, but it got to the point where it became very intrusive, and I had to exit that. And it was complex the way that I exited, but it happened because the weirdest thing is that one of those investors died.
Rude.
And
why would they do that?
That was rude and inconsiderate.
Yeah, not considerate of you at all.
No, and I was miffed, obviously, but that just, without going deep into it, that happened, and that whole scenario was really a learning experience in so many ways. But it also made me realize, hey, the control that I had over the company and where I could draw the line, and what my job was as CEO, and so that taught me a lot. Another one was, just working with some difficult personalities in the business.
That must be saying something, because you and I get along great, and there are these other people who know nothing who consider me to be one of those personalities. So this must be truly difficult personalities.
No, yeah, truly difficult personality. So that taught me a lot too. And
so just examples, obviously we aren't going to name names, but what are some of the traits you saw that you found difficult or bothersome?
Angry, blasting emails.
Okay.
That designed to scare me. Yeah. And but then having really good lawyers who would just interpret that, and it just taught me, again, it taught me to stand my ground and realize where I stand and where, what my job is and what I need to do. And it wasn't easy, but I got through it, and things are so great now. So these things pass, these difficulties, they do pass, but without getting too deep in the weeds on that was a trial. But
how have you changed? Like, this changes you.
I'm less of a hothead than I was, and because you just I may be mature. I don't want to, get your hopes up that I am mature, but I'm just saying.
Further along, closer.
Yeah, closer to maturity. So, there's always room for growth, but just to I don't know, and to put the first things first. All these things that you hear, these idioms that discuss wisdom. It's like, oh, I get it, and how important it is just to wake up, dress up, suit up, show up, like you do for sports, and that's what I do every day. I don't know what the day is going to bring, but you got to show up, and that is the number one most important thing. Showing up every day. It's the simplest thing and the most difficult. And so people would say to me, like people on my staff, do you ever think about quitting? And it's like, yes, but I never would. And so 17 years later, here we are. So uh,
What that
or
made
as
me
the
think
wood.
of, the list of things you gave. I forget who it was. It was some podcast. I think it was Modern Wisdom, Chris Williamson. He's a very good podcaster. And he has a list of things that you cannot be taught, you can only learn. And so these aphorisms, these sayings, we hear them, but it's life that adds meaning to them and makes them sink in. And then we go, oh, that's what that meant. I've heard it all these years, but I will say this, hearing it enough,
Mhm.
I do think prepares you more for when it happens. And it takes less pain to learn it.
Mhm.
If it was pounded into your head and it didn't sink in, you couldn't be taught it, but it makes it faster to learn it.
It does. Yeah.
Um,
Yeah.
What are your
It's those are some trials without getting too specific. And you know, other people in business, you know, some competition, you know, that wasn't necessarily great. You know, competition means different things to different people, and sometimes it's on the not great side. But you know, all these things have passed, and now we're thriving and in a season of no overwhelming difficulties. So it's a good season to be in.
what are you proudest of?
Huh. I mean, besides my kids, you know.
Right.
Yeah. Well, I think my staff and the success of uDirect, and a lot of people have been with me for 10 years or more. Uh, watching everybody, you know, grow as they work here, and how they're learning about financial freedom, they're learning about alternative assets so that they can build their own wealth. So that's wonderful. But I'm very proud of uDirect IRA Services and what it is and what I'll eventually have to pass on, you know, and it's set up to continue and continue and continue. So
And
very proud of that.
why uDirect? There are other companies, as we discussed. I'm not exactly monogamous when it comes to custodians because of my role in the industry of being an advisor. I deal with a lot of different people.
We do.
Tell me why uDirect. And I won't ask you to crack on anyone else because I know you wouldn't. And I wouldn't ask that. I'm just pushing your buttons a little bit because it's just not your nature. But what would you extol about uDirect?
I think to myself, what's important to the account holder? You know, what's important to them? The one thing is that when they call us, that they're going to talk to a person. And so that's really important. So when you call us, you know, we return your calls. You're not going to wait a week to hear back. You know, you're going to get us on the phone pretty much the way we have it set up. You're going to get a person. And the fees too. The purpose of a self-directed IRA is to grow your wealth and not have it sucked away by the very vehicle that's growing your wealth. So our fees have always been extremely reasonable, flat fees instead of a sliding scale. Like, we don't penalize you for doing better. Like the more you make, the more we take. It's not like that. It's always been a flat fee structure. So service and fees are incredibly important to savers, you know, to people who are looking to save for the future. And so that's what we offer.
What kind of people, that's a broad question. I'm going to ask it broadly and then I'm going to narrow it.
All right.
What kind of people, other than glorious, wonderful people whom you love, come to uDirect? What are if I were to go to a random meeting of clients, there's a party,
Yeah.
people have alcohol, which, as you can tell, I'm slightly fond of.
Yes.
And
I was thinking you worked in a liquor store, so I wasn't going to ask. Yeah.
We have made it into a liquor store, but let's add one adjective: a tasteful liquor store.
Okay.
Bougie.
Very nice.
What kind of people are your customers?
Boy, I'm just thinking of some of our gatherings, and they're professionals. I think the age for a self-directed IRA investor seems to start around the 40s. I mean, a lot of people are obviously, you know, early beginners, but by the time you're in your 40s, you've worked a couple of jobs and have a few employer plans you could roll over. You know, you have some retirement savings, because to self-direct and pull the trigger on something like when we started with, you know, buying a whole house in your IRA, you need to have some capital. So by the time you get to your 40s or even your late 30s, you've worked a couple places and you've saved enough money to put in a self-directed IRA, maybe put 50K in a private placement, or maybe, you know, maybe make a loan, have your IRA be the bank and lend money. So you have enough retirement savings to do something with it. So that would be like a demographic. Like, how old are people? Usually around their 40s. And most of the times everybody's very charming. I'm thinking the groups that we've been together, you know, when we've all gotten together, you know, professional people. and families that are building their future. So like, regular, conscientious, wealth building people.
And well, I wonder how regular conscientious wealth building is, but I get it amongst that
Well,
group.
in our lives,
It is regular. Yes. No,
that's
ditto,
what we see.
totally. Because the
But
people
just,
we deal
yeah.
with, they're by definition curious, creative, because self-directed IRAs are still, it's insane to me how few people know about it.
Oh,
It is,
yes.
I talked to somebody on an airplane
I was thinking the same. Yeah.
and you talk to people
On an airplane.
Right.
Oh yeah, me. I'm
and
so
you tell
quiet,
them,
yeah.
what it is you can do. And their jaw drops.
Right. Never
What-
heard of it, right? Never heard of it.
Do you recollect? I think it was what was it, like 2%, 2.5% of IRAs are self-directed, and they account for some ridiculous proportion of the wealth, like 20 or 30% in IRAs.
I haven't heard that. I've heard 4%.
Okay.
Are in alternative assets. So that's how they count it, like who has alternative assets. Now, it wasn't always the case where we had to report what's in the account when the 5498 is filed, but now we have to tell them what the asset classes are. So it's around 4%. But you're right. I mean, 51 years that people have been able to self-direct, and you're right, the vast majority of people don't know that they can do it.
What are the asset categories that people like to invest in at uDirect?
Yeah, number one asset class and I'm on the board of directors for our industry, the Retirement Industry Trust Association. And so we have a lot of statistics there. And so the number one asset class for our whole industry is private equity, private placements, syndications, whatever you want to call it. Those deals are number one. And secondly, I think is loans, making loans, being the bank, lending money, or buying performing and non-performing debt. That's a totally different thing. Buying performing and non-performing loans from others.
Is that still hot? Because I know, back in 2009, people were buying houses routinely for 10 cents on the dollar by getting the mortgage.
Yeah.
That's still hot. People are buying debt.
Yes, absolutely. And buying performing and non-performing debt, absolutely still. But what's come up as the economy changes, and we've seen lots of fluctuations in the economy, we always will, but is cryptocurrency, how that's coming to the forefront. So we'll see peaks where crypto will be that month will be the number one thing that people invested in that month, and then it'll level out, and just as crypto does itself. So people our account holders can go right onto the platform and invest through Coinbase, their IRA into these crypto assets, but also precious metals. This year, I'd say the last 12 months has seen a run up as well. So precious metals, which of course kind of a hedge against inflation, you want to have some of it in your portfolio. Precious metals, I mean, the crypto and precious metals are typically on the lower end, but the upper end is the loans and the private equity.
Okay. No, I am seeing a lot of, now the private lending I continue to see more of. And interestingly, because right now we're in the middle of the larger private lending industry imploding, and for the usual reasons. And I'm talking about these large hedge funds that had private lending operations. I'm not talking mom and pop. Those mom and pop are usually a lot smarter because it's actually their money.
Yeah.
But we're seeing a lot of these private equity funds that have a private lending arm. And the problem this is always what's going to get you into trouble. It was opaque. They never really disclosed what they were doing. So it turns out they had a lot of off-balance sheet leverage. Does that sound familiar going back to 2009?
Yeah, well, that's what got us in trouble, yeah.
And the same things, it's just eternal. For example, when we have people doing private lending, one of the things that I'm sure you've taught a good bit on this too is you have to talk to the title company, because a lot of the private lending I see is real estate based.
Right.
It's also the number one version of IRA fraud I've seen by far. People issuing debt that is really not very good. And usually what they'll do, sometimes the collateral doesn't even exist. But that's a failure of due diligence. You are the one that has to contact the title company. You're the one that has to tell the title company, you are not getting a wire until certain things happen.
Right.
And it's not a hard list of steps to do. We might do something on that one of these days. Maybe put together
I would love that. Well, and you can, any title company will give you what they call a preliminary title report. In fact, some of them have it online for free, like Night Owl. I forgot, I think it's First American or something like that. They have these online title reports that you can just see, at least a prelim. It doesn't go deep into the, the Wayback Machine, but where you can see if the person that you're lending to actually owns the asset. That's number one on due diligence.
And which one you are. You're not the fifth lien. That's always important. Right. Making sure the money is used for the stated purpose, because I've seen a lot of them where they take the money and they do whatever they want with it. And again, the investor doesn't follow up. They don't do their homework in terms of that due diligence. So, and I don't want to scare people. I think lending is a fantastic thing to do. I would probably not do what the large private funds that are in trouble now have done. And with the smaller investors, you have to follow up and make sure that the money is actually being used for what they say it's going to be used, that the property exists if it's secured by property, and it should be. That's another one that sets me off. I've seen people, you're going to know someone local to California, I'll give you a hint, looks like Santa Claus, who goes around and offers to borrow from IRAs with no collateral and no personal guarantee on his end. So you have no enforcement, right? You don't have a personal guarantee. You can't go after him. And he's not willing to offer collateral, or if the few times he does, it's really bad collateral. And he makes the rounds at the same real estate investor associations that you've been at. I don't permit this person to be at my events. So it's something to watch for. I think it's like Spider-Man. With great power comes great responsibility.
Yes.
You have to do your own due diligence. Now, if you do, I want to hear what your favorite deal, I'll give you a minute to think about it, is.
Yeah.
My favorite deal, I was at an event in Orlando and a young couple, and this was back during, it was in 16. So it was, you could still buy notes cheap, but not like you could in 09, but they'd managed to find a few. And they came up to me during a break. I lived in Columbus, Ohio at the time. And they said, do you know anyone who does service of process in Newark, Ohio? And I said, well, first of all, it's pronounced Newark. But yeah, what do you need it for? Well, we bought a note wholesale and we just want to sell the note. And I said, well, how much did you pay for it? $6,500. Okay, how much do you want? $13,000. Okay, I have a client there. They're going to drive by the property and look at it because it was in foreclosure. They bought it from a hedge fund. It was a land contract, which in Ohio is very easy to foreclose on. And so my client drove by the property, took pictures, sent it back, did a little bit of a search, did a preliminary title search. And I said, yeah, let me do my due diligence, but we've got a deal. So I ended up buying it. And we put about another 12 of rehab into it. So we had 25 grand in it. We held it till 2024. We made all of our money back in rent and then some. And this was in my solo Roth 401k. And then we sold it for 80 grand. And that was a good price for the buyer. Everybody was happy. Right. So that's my favorite deal because it just came to me, but I was listening and paying attention and moved quickly, did the due diligence and acted on it. And so it worked out quite well. I would like more. If anyone would like to approach me when I'm out in public speaking, this would be something nice.
I love the wins are awesome. One of the things about being in this position is you hear about when it doesn't win. That's when they call you, But one of the investments that you and I talked about last year was when this young man invested his Roth IRA in Super Bowl tickets. And oh boy, I said this on a podcast and it got a lot of attention because just for so many reasons, it's like, you can't do that. It's like, but this kid did. Now, first off, today, that in the self-directed IRA space, we're held to a higher degree of accountability than we were back in the, early 2000s when this happened. So we're held to a higher degree of accountability. And also you have to find a custodian that would hold this asset today. May not be the case, but these were regular tickets, not collectibles. The gentleman who did this with his Roth IRA was not in the business of being a ticket scalper or selling tickets. So he wasn't running a trader business. And the tickets themselves were not collectibles. They weren't special tickets or just any ticket, but he bought them with his Roth and resold them. And the profit went back into his Roth IRA tax-free.
I remember, because that generated a lot of buzz, and you called me because some
Yeah.
people were making assertions that we went through and took apart one at a time.
Yeah.
Of why you can't do this. And like, no, actually, I would happily defend that in an audit, or better yet, tax court. I would have a ball with that.
And you have to be creative. Like you're saying, I mean, investors are creative people. And how do you make this work? And look at the deal you just talked about. That didn't just fall in your lap. I mean, that you had to take something that looked like a turnip and turn it into a rose, which you really did.
And it's always about the due diligence, knowing what you're doing. One of the things I like to tell people with IRAs, that's not the place to practice. If you're doing something, because first of all, your Roth in particular is your most precious money in existence. That's your tax-free money. It's not even traditional tax deferred. It's tax-free. That's your most precious money. And that's where you put your cherries. But a cherry includes being good at what you do.
Mm-hmm.
So you spot a great deal, but you also know how to do those kinds of deals. Also, when you're first getting started, you don't know if it's going to succeed. So A, you don't want to blow your Roth. But B, let's say it doesn't succeed. You want to be able to get a write-off. And you don't get that in the IRAs. I get that all the time. I lost money in my IRA. How do I write it off on my 1040?
Yeah.
You don't.
Yeah. Just like when the stock market goes down, you don't get a write-off.
Yeah, I mean, the trade-off of the tax-free is no tax loss. So no taxable income, yay, we like that part, but also no tax loss. We don't like that part as much. The object is don't have a loss, or if you do, kind of do that somewhere else. It's when people get into highly speculative things they don't know about in their IRAs that I get twitchy.
You make me think of something that I would like to mention, and that is that one of the little tricks, or the insider bit of knowledge I have about doing due diligence, is FINRA's broker check. And this doesn't have to do with notes. It has to do with an SEC type of asset. But FINRA, which, as you know very well, is the enforcement arm of the Securities and Exchange Commission. And they have a website called Broker Check. So part of your due diligence when you're investing, like I say, the number one asset class are the syndications. A lot of times you'll find these people are registered, and you can find them oftentimes on this Broker Check. So before you invest at all, at least when we're talking about due diligence, Google them with the word fraud after their name. Have they ever been in trouble for fraud? We had somebody come to us to do a $500,000 loan to this company. It turns out that the people that she wanted to make the loan to, one of them had been incarcerated because the SEC put him in jail for stealing money from people, but she wanted to give them her $500,000. It's not, like you say, it's not money you get back. So the first place you start with due diligence is just the internet. Their name, fraud, their name, lawsuit, and see what you come up with. Just the bare minimum.
I agree. People don't even do that. Take the time. There are good prompts with chat and with Claude. And I like to use different AIs, and I like to have them fight each other and check each other. And of course, with a common name, like say Joe Smith, it's a lot harder to do. Right. Then you need to get more information from the person and see how they react. Listen, I need a way to do a search on you. Joe Smith's not going to cut it. I need some unique information that will allow me to kind of look and see, and just watch how they react.
Oh, yes. I love that.
That's usually very telling to me. If they get it all defensive, like if they decline, but at least they're calm and polite, they're like, it's not really worth my time. Okay, maybe you're not a bad person, but you declined. I don't really want to do it. But if they get all, how dare you question my integrity? There's an old New England saying, the more he spoke of his virtue, the faster we counted the silverware. That has proved true so many times. Oh, right. I don't know about you. With me, when my gut likes someone, maybe it's right and maybe it's wrong. But when my gut doesn't like someone, what I've learned is it's always right. And so that's part of it. The gut check, the research, the deep investigation. What's their history? Especially as I get older and more risk averse, which is normal because we have less time left on the planet. And so the time we have is more precious. It's harder to earn money going forward at a certain age, at some point. Like right now, you and I are both peak, but at some point we're not.
Yeah.
And it's what's their experience? Ultimately, you get lured by the high return, the greed glands get going, but a track record. There's a syndicator, a real estate syndicator I work with in Denver. He has a long history and he's very, very consistent. Now, the catch-22 with him is he has to do me the favor of letting me into his deals.
Oh my.
Because the way he is, he has no lack of people coming to him. He has a track record. He has an abundance mindset. He's not greedy. He has most of his net worth, by which I mean well past 90%, invested in his own deals. So he always has, that's a big sign, big skin in the game. Lots of skin in the game. And in the real estate world, if they charge too many fees, their incentives are not aligned with mine. If they charge a bunch of fees, they get paid no matter what. No, I want someone who's just like the pilot on a plane. You land, I land.
Right.
You don't land, I don't land.
I love that.
Yeah, let's kind of be aligned here.
Well, and talk to people who've invested with that person. I mean, what you've said is obviously genius, but also talk to other investors. Who else has invested with you? And let me talk to them and how do they feel about the performance? Was it as promised?
That's a nice one. The groups like the one that you have, the Orange County, is it RIA?
Yes.
RIA? The Orange County Real Estate Investors Association. One of the great things about those groups is the ability to be able to trade, well, sometimes literally, but also figuratively, notes on who are we dealing with? What's their reputation? Can they show their face here still? That's really useful. What do you personally like to invest in?
Me? Well, several things. First thing that came to my mind is, the guys from Delaware Depository, they call me a silver stacker. So I do like precious metals. Just something I like, but I own rentals, single family rentals. I have stock market assets. We have a defined benefit plan. So I've got some stock market assets but that's what I invest in. I think largely real estate and metals.
You must be really happy with where precious metals have gone in the last X number of months.
Since I was buying silver for 13 an ounce back in the day.
Nice.
I know.
Nice. Peter Schiff was finally right. It was just the timing.
Yeah. Well, well, and that's the thing, like, when's the best time to plant a tree? It's either today or 10 years ago. Right.
Yeah. Yeah. But not tomorrow.
Yeah. So that is, that was the case for that. Sometimes you get lucky, but no, I've always been, since I was, I think 28 when I got into real estate. And now that I'm 29, I've learned so much. But no, the years go by.
Well in a year.
That's a lot. But, but just the real estate, I've had 3 real estate licenses and been so involved in, and also in the mortgage industry, in servicing and origination for so many years. I learned a lot about it. So I just feel like that's the asset class I know best. And that is one of the little catchphrases about the self-directed IRA world. We say, invest in what you know best. Because if you, just like you, somebody came to someone else with the note deal that you talked about, they don't know it as well as you do. It's something that you know best, and that's why it worked for you. So you want to invest in asset classes that you really know and understand, so that you understand the caveats. You understand what to look for, right? Do you agree?
Oh, yeah. Yeah, whatever you know best, which by definition, you've already done it.
Right.
So it's not a new thing. And as long as it's something you can do, and there are offshoots. For example, I know tax law really well. I don't know how that helps me invest in an IRA other than following the rules. But buying a law firm is probably out of the question. But there are always the kissing cousin things. Like in my case, I talk to so many clients, as do you. I think what's nice, we both have a list of people we can go to.
Yes.
All right, I'm starting to look at this. I'll probably use regular money. How do I not mess it up?
Yeah.
Practice a bit with the regular money. Once you've clearly got it, okay, now we start using the precious money. I'm going to start taking Lord of the Rings quotes, my precious money.
In a non-greedy way. We all have to, by the way, retirement isn't even biblical, saving for retirement. And that's what we say in the phrase that we say, but really we're just saving for old age when we can't work. It's not just necessarily like you have to retire. I don't know anybody who wants to just stop and have no purpose and not do anything, but there's a time when maybe we can't work, and that's what we're saving for. So we don't hit that wall. and not have anything, to show for it or anything to sustain us. So this is why we're having this conversation right now, is helping people prepare for the future, or to leave something to the next generation, a legacy. So there are lots of reasons to invest for retirement, even if you don't want to retire. Like, John, you never need to retire because you'll always be you. You'll always know what you know, and be helpful to people. I'd like to be the same. And we don't have to retire, but there may be a time when we don't want to work anymore. It's a different thing.
Knowing that you can, once you're in the position that you know you don't have to, is when you truly find out, do you want to?
Yes.
Or allows you to go into something else you always wanted to do. People are, gosh, there's so many things to do in life, and so much information, and so many options and opportunities.
Yeah.
And you're curious. Well, once you have yourself set up a certain way, you can indulge that curiosity in a serious way.
Mm-hmm.
Throw into it modern uncertainty. Technology is expanding faster than what we are, depending on where you stand on it, designed, evolved, or both. Because I actually think evolution could be the creative design. I don't think they're mutually exclusive. But either way, the way we're built, we are not built for the speed of change that is occurring, particularly with AI and soon robotics.
Yeah.
Do I think
that's all here? It's not soon, it's now, right?
Yeah, and daily. I mean, the rate at which it changes. Now, I'm not worried for the next, I'd say roughly 3 to 4 years, that AI will replace JI, because it doesn't have nuance. You have to know the questions to ask it to properly deal with it. So when I just had this on a webinar fairly recently, the typical young person types in I don't need you, I got AI, why are you on the call then?
Yeah.
And then I tell them, go ask it this question and see what you get. And because AI, let's remember, the internet is what feeds AI. The internet is the home of TMI and Gigo. You know, that's our mutual industry. There's so much that's just wrong on our mutual industry.
Garbage in, garbage out.
Like say LLCs, asset protection. Let's think that one through. LLCs and asset protection, most of what's online is a direct or indirect product of Nevada and Utah. And there are people that make a ton of money selling it, so they have the SEO and the marketing budgets. And then the lazy people, who's most of them, including attorneys, especially sometimes attorneys, shamefully, copy that and mindlessly put it out there. Well, AI is not really good at distinguishing between sources unless you're very good at prompting, telling it what to look for. And there are some things that are unpromptable. So it's Gigo and TMI. There is still, actually, I think human judgment and gateways to information are becoming more and more important, especially with deepfakes. We're going off on a different tangent.
Yeah.
But it also has to do with meaning, because let's say we get UBI, universal basic income. Most people derive a lot of the meaning in their lives from work.
Yes.
And it makes sense because we're social animals, we're cooperative.
It's part of our humanity. This is why we've always been this way, yeah.
So that provides options. I'll tell you, I have been changing my vocabulary on retirement accounts. I'm calling them, and specifically with regard to the Roths, tax-free accounts is a better way to look at it.
I love it.
The number one objection is that people say, well, I don't want to wait till I'm 59 and a half. And my response is, actually, you do. And I'm not telling you you should want to wait until then. You actually do, and you don't realize it. And they tilt their head at me. And I say, listen, I get it. You don't really put money in these accounts until you have more than you need to live. Once you're making more than you need to live, now there's need and then there's need. People have somewhat different standards on that. But bottom line is, once there's excess, what do investors do when they invest and their investment makes money? What do they do with the investment proceeds, whether it's the sale of a property or it's dividends or it's interest income? What do they always do?
Well, investors will reinvest.
They're not going to touch the money anyway. And then when I say it that way to them, I ask them, I wait for them to answer. What are you really going to do with the money? What are you going to do with the interest income? What are you going to do with the rent? I'm going to buy another rental. I'm going to go lend more money.
Yeah.
In other words, you're not going to consume. Why wouldn't you do it in a tax-free environment? It's not a retirement account. It's a tax-free account. that if you really needed to, you could withdraw from ahead of time. Not recommended. There are penalties and
No.
such, but you don't really need to. You have what you need. And so that's where, now when someone's just getting started, I get it. But then it also becomes a standard of, well, what do you truly need? Because you and I are of a generation. We're of a very similar age. I don't think that in my 20s, I needed 3 Starbucks a day at $7 a pop, etc.
And now that's just waking up. Or is that what you're saying?
Yeah, I mean, people take stuff for granted.
Yeah.
And so, and I'm sure that resonates with you. You strike me as a grateful person.
I am very grateful.
So anything else you want to leave us with? You have a great story. You're being very modest, and I don't want to dig in the details you don't want dug into because I think you're a bit private and modest. On the other hand, what would you tell young people today? What would you tell today a single mom who says, it's rigged against me? There's no opportunity. Houses are too expensive. Gas is too expensive. Food's too expensive. What would you say to that single mom, having been there and done it?
Yeah, you can't look at that. You just, that doesn't exist. That only exists in your mind. You know, I mean, some of that's true, but instead of focusing on the problems, it's like, what can I do? And you'll find, you know, just what can I do? And another thing I would do is journal about it, you know, and really get super intensive and intentional. You know, what can I do? Find the little fissures where I could kind of get through and make something happen. So just start focusing on what you can do and do it. And I think that's a great way to start. I mean, obviously there are obstacles. I went through a tremendous amount of obstacles and worried about things that when they came to fruition, I didn't even need to worry about them at all. Like, how am I going to have enough money so my kids can take the school bus? Because it was going to be $1,000 for both kids to take the school bus. Like, where am I going to find $1,000 at the time? And by the time, and I worried about that, but by the time it came up, it wasn't even an issue. But just focus on what you can do, and forget about all the noise, and just focus on the positive.
What were your possible excuses to have failed? And probably they went through your mind. You're human. We have a negativity bias.
Right.
When you were getting ready to do this thing in 2009, what were the reasons that it might not have worked? What were the things that kept you up at night, or that you told yourself that ended up not being true?
No, I literally didn't think about it.
That's
and I'll tell you,
why you succeeded.
Well, maybe so, but it was in a situation where, like, I burned all the ships, you know. I'm on the island. There's only one way, you know, and that's winning, and I'm going to win. And I did, you know, that's how it worked. I mean, it literally burned all the ships. And I have 2 kids, got, you know, taken care of. And what we won't do for our kids, you know, we just have to make it happen. And so I didn't have a choice. So I just thought about what I could do. And I never even thought about it until you asked, but that's how I felt at the time. I never thought about failing.
That is very Kaaren. I have one of my kids. It's funny you mentioned this, because one of my kids did a brilliant job of saving a bunch of money at work.
Nice. Yeah.
And then got comfortable.
Oh.
And this kid's friend said, you need to give the money to your parents, or you need to invest it somewhere where you cannot touch it. You need to do something. He said, or you know what? Just go spend it all now and get this over with and get off your ass.
Yeah.
And so it's a problem. We seek comfort, but comfort enables inferior behavior.
Yeah, it does. It's not a good thing. I mean, we want to be there for a minute, but it's not a good place to live. I so agree.
How do people find you?
Wow. info@udirectira.com comes to mind.
uDirect. Is there a dash, or is it just the simple word?
You know, when I came up with the name, it's kind of like U-Haul, you know, because when you get a U-Haul, they're not, you know, it's like self-directed. So same thing. They're very similar. You get a U-Haul truck, they give you the truck, we give you the account, but they don't load it for you. You know, they don't drive it for you. You know, when it's a U-Haul, they just give you the vehicle and you go do and you haul it, you know. Well, same thing with uDirect. We give you the account and you decide what you put in it, how you use it, what your strategy is. And we walk you through the process and support you completely. So that's where the name came from.
All right. So
uDirect
you
IRA
is not
Services.
you as in three letters. It's you as in one letter.
Yeah.
info@udirect.com.
uDirectIRA.com. Actually, I did get that.
uDirect.
I was able to get the URL, uDirect.com. I do have that. And you'll find our website that way. uDirect.com. You'll find
So
us.
it just directs over appropriately enough.
Yeah. Well, uDirect.com is our URL as well.
And I know you put out informational content. What are some of the things you have coming up or that you've done that you're really pleased with? What kind of content do you like to offer? What really lights the fire here?
Well, you mean like this
Yeah.
that I have in my hand?
Close to the screen. Let's get it in the camera.
This is super fun. I did a collaboration with Bigger Pockets, and I'd given them my manuscript, and years went by, and then they said, "Hey, remember that manuscript you gave us? We're ready. Let's collaborate." And so, even though I'd probably been working 10 years on the book altogether, and it was like September. They said we want it by November, so I'm here on the weekend, writing, and then really great staff to work with. It was so fun. And we worked together and collaborated, and then they put in some of their stories. So there's that, because I wrote more of a storybook, the stories about people, how they self-directed their IRAs, and it turned out to be more of a guidebook. But that's also very helpful, because it's like, oh, how do I do this? Oh, wait, it's it's page 59. Yeah, there it is. So it's a guidebook to how to self-direct an IRA.
Stories are how people learn. I've learned that more and more. That's just, we're wired for stories. We remember them.
Mm-hmm.
So, well, cool. So info at uDirect or at
uDirectIRA.com.
IRA.com.
Yes.
See, this is why I need things written down. I can barely remember my name, and I haven't even started the drinking. It's 3.
I know you're only using half your name here. It's just Hyre. Your name is
Yeah,
John.
it's just easier. There's so many Johns. We were at a charity auction in Charlotte, and my dad, my son, and I were there, and we are John Hyre, the second, third, and fourth, respectively. And so our shtick was, somebody would come up and we'd be lined up, and they'd say their name, and John Hyre, and then my son would stick his hand out and go John Hyre, and Dad would do it, and it was just a lot of fun to mess with people. Like, what's going on here? Are you pulling our legs? Like, well, we will, but no, not right now. So fun stuff. Well, I hope people reach out to you. Now, you do IRAs, HSAs, Coverdales,
Solo Ks.
solos.
Yeah, Coverdales. Oh, actually, we don't do the Coverdale because they're so teeny. That's something we used to offer, but we didn't have any takers. But we do the HSA. Traditional Roth, SEP, simple, spousal, inherited, Solo K. We do all of those.
Okay. Well, cool beans. People know how to get a hold of you. Thanks for coming on. I
Thank
really
you.
enjoyed listening to your story. What you went through, what it took to get there, that's just amazing to me. I hope you tell more people. It well and truly is something people ought to hear. Well,
I hope it inspires someone who might be struggling, and you can do it. You just have to stick with it. That's it. Is my opinion.
Kaaren, take care.
Thank you, John.